Hey friends, Loss Ratio here. This may very well be the last open water episode of Loss Ratio Talks About Insurance while he tries to catch a fish. Winter is just around the corner and the next episode may very well be on the ice, so stay tuned for that.
Yeah, well that's why you're a moron!
So in this episode, I'm going to switch up the topic a little bit and talk less about self-inspection and more about another hot topic when it comes to property underwriting. And that topic is geospatial data.
You keep using the word. I don't think it means what you think it means.
Now, geospatial data for underwriting is obviously nothing new. However, there most certainly has been an explosion of interest and utilization of geospatial data and imagery here over the last 5 to 10 years. There's been a plethora of fish. Yep, there's been a plethora. Hopefully there's a plethora of fish this morning. That's a decent one. Up you come. Not huge, but not tiny either. All right, let's let this guy go. As I was trying to say, there's been a plethora of insurtech startups in this geospatial imagery and data space over the last 5 to 10 years, and they've been doing some really cool things and bringing a ton of value. And of course, anybody who's doing cool stuff and bringing value in the really tough property market that we're in right now, I'm gonna be their biggest cheerleader and give credit where credit is due. As the dynamics around property risk have evolved over the past few decades, it's never been more important for personal lines underwriters to be innovating and to be looking toward emerging technologies that they can leverage to ultimately improve the accuracy of their risk selection. So for the purpose of this video, I'm really just going to focus on one aspect of geospatial, and that is primarily around aerial and satellite imagery. Because I live in the property inspection world, obviously imagery, photos of a property, is really the primary component of the service that we've provided for decades. And I would argue that images, photos, are still the primary source of truth.
I want the truth!
When it comes to property risk assessment and underwriting. So today there are really probably about half a dozen primary players in this geospatial data place that are really dominating the market. Some of them are capturing satellite imagery of properties, and others are capturing imagery with fixed wing aircraft that have very sophisticated camera systems.
You're gonna see some serious
Regardless of the method of data capture, these images can be extremely valuable for underwriting, not to mention the claims world. But for the purpose of this video, I'm focused on just the underwriting use case. Now, various geospatial imagery vendors are capturing different resolutions of imagery. Some are capturing higher resolution imagery than others, and the higher resolution the imagery, ultimately the more confidence you can have in making decisions because you can just see things more clearly. A very common example of this resolution aspect would be looking at the roof of a residential property and being able to accurately and confidently say that, hey, that roof has moss growing on it versus just a shadow perhaps from an overhanging tree. We'll talk more about that in a couple minutes. Many of these geospatial firms just over the last 5 years have really been leveraging computer vision models and artificial intelligence to be able to derive some really cool insights from this geospatial imagery. These models can do things like detecting pools on a property, detecting trampolines, detecting tarps on roofs or significantly damaged roofs. And because these assessments and determinations are being made with computer vision, they can be generated very quickly and at scale. Now, another really cool innovation in this geospatial space for property underwriting is automated change detection. And what this can do is take historical imagery over time and compare those images against each other and identify changes on a property. There are a lot of really cool things you can do with this change detection. A couple of my favorite are identifying additions to a property that perhaps have not been disclosed to the insurance carrier. And this is a huge deal. It happens all the time where a homeowner adds on a significant addition to the home, 400 square feet, 600, 800 square feet added onto the living space of the home. And they just never think to make their agent or carrier aware of that addition, which obviously is adding significant dollars to the replacement cost of that home. The coverage A limit likely needs to be adjusted. A new replacement cost valuation needs to be completed to determine what the new replacement cost would be with the addition. Through the utilization of this change detection with geospatial imagery, that issue can be addressed. The carrier can be made aware of the fact that the property has changed, there's been a significant addition to the dwelling. The carrier can get in touch with the agent.
Hello, Mrs. Sheep. Can Pepper talk to Susie, please?
Who can reach out to the insured and make sure that that property is properly covered and is not underinsured. Another really cool application of this change detection methodology that's just come out here in the past couple years is determining roof age. And I've got to admit, when I first saw this announced, I was skeptical.
Inconceivable!
Because the reality is, the imagery captured via satellite or fixed-wing aircraft, regardless of the camera system used, is just not going to be able to capture high enough resolution to accurately provide a condition rating for a roof. You're just not going to see things like granular loss on a composition shingle roof through aerial imagery. Now, if you're flying a drone 10 feet above the surface of the roof, that's a different story altogether, but we're not talking about drones here. We're talking about imagery captured by fixed-wing aircraft, thousands of feet above rooftops, and satellite imagery from way higher than that. But after having conversations with several of these geospatial imagery providers, I quickly understood how they're assessing roof age, and quite frankly, I love it. There's a fish. Oh, it's a pike. Give me my worm. These vendors are actually using this change management to look at the roof as a whole. When they're looking at this imagery that's been captured in, say, 12-month or even 6-month increments, they can see when the roof has changed entirely. For instance, the roofing material has changed from a composition shingle roof to a metal roof. A major change like that is going to be clearly visible and easy to confirm even with satellite or fixed-wing aircraft imagery. If imagery from 2022 shows that it was a green roof and the new 2023 imagery shows a red roof, obviously we now know that the roof was replaced sometime between 2022 and 2023. That data is very valuable, and again, through the use of computer vision, that can be determined and confirmed without the need for any human review. As I've mentioned in previous episodes, the traditional method of sending boots on the ground inspectors to a property to confirm these types of data points is only continuing to become more cost prohibitive for carriers. And with the continued financial pressure from inflation and skyrocketing loss costs, no carrier is looking to spend more on property underwriting. So this geospatial data can provide a low-cost alternative to those traditional underwriting methods. So with all of that being said, you can probably tell I am a huge proponent of geospatial data for underwriting. However, I do believe it is extremely important that we approach these major changes to underwriting methodology with eyes wide open, look at it pragmatically, and fully understand what the actual real-world capabilities and applications are, and ultimately make a determination of what it can do and what it can't do. Because like most technologies, geospatial is not the silver bullet answer for underwriting. It's certainly a piece of the puzzle. It has its place. It brings a ton of value, but it is not the be-all end-all solution. So we've talked about several of the ways that geospatial imagery provides massive value, and I didn't even cover all of them. But it's important to take a few minutes to talk about what geospatial can't do. And first, I would say, obviously, geospatial does not have X-ray vision.
I wish I had X-ray vision.
So for property underwriting purposes, you don't get any visibility through objects. If you have tree branches overhanging a roof, the visibility of that roof is obscured and you can't see it from the sky. You don't get any visibility underneath decks or carports or any structure that has a roof. And obviously, you certainly don't get visibility inside any structures. So again, this doesn't diminish the value. It's just a matter of being honest about what geospatial can do and what it can't do. And as I've mentioned in prior episodes, in today's environment where interior data on residential properties has never been more important for carriers from a loss perspective, geospatial imagery just is not the solution for that. And of course, I'd be remiss in not saying that self-inspection is the answer for capturing that desperately needed interior data in a cost-effective manner. Now, the other significant limitation of geospatial imagery is the time factor. And what do I mean by that? Well, it's it's important to understand that for underwriting purposes, when you're looking at any imagery, any photos of a property, the value of the data derived from that imagery decreases over time. Now, why is that the case? Well, it's really pretty simple. The older the imagery, the higher the likelihood that something has changed since that imagery was captured. In other words, as time passes, the confidence level in the data derived from that imagery significantly decreases. So, simplest example, if I'm a property underwriter and I'm looking at a photograph that my policyholder provided via self-inspection.
Let's take some pictures.
And they took that photo 2 days ago. And in that photo, I can clearly see that there's a trampoline in the backyard. If I know the trampoline was there 2 days ago, there is a very high likelihood that that trampoline is still there today, and I can take whatever appropriate underwriting action may need to be taken based on that data point with a very high level of confidence. However, if I'm looking at an aerial image of that same property, or if a geospatial vendor's computer vision is looking at an image of that same property, and that aerial image is from, say, 6 months ago, there is obviously a much higher likelihood that the reality on the ground has changed. Is that trampoline still there? Perhaps it is, but maybe it isn't. Perhaps that trampoline was owned by the previous homeowner from 6 months ago and the property has now changed hands. Or perhaps the homeowner just got rid of the trampoline sometime over the past 6 months. So this is just one very simple example, but I think you get the point. The older the imagery, the less confident you can be in making underwriting decisions based on data from that imagery. So as you can see from just that one simple example, and we could talk about dozens of others, the frequency at which aerial and satellite imagery is captured is extremely important because the older the imagery, the less value it holds for underwriting. For dozens of risk factors that are often visible in aerial and satellite imagery, you just can't make accurate and confident underwriting decisions based on data that's 6 months old or more. Now, with all of that being said, it is also very important to understand when you're looking at geospatial providers and ask the question, how often are you capturing new imagery? And ultimately, the answer to that question nearly always is, well, that depends, because it is very expensive for these geospatial providers to capture this imagery. And so for many of them, they're only capturing the most urban areas around the United States with significant frequency. And by significant, we're talking maybe every 2 to 3 months. And as you move into more rural areas of the country, less populated areas where there are ultimately less properties to assess, many geospatial providers are only capturing imagery in these more rural areas once a year, because it just doesn't make economic sense for these providers to capture these rural areas more frequently. So what does all this mean and what are the takeaways? Well, number one, I've never been more excited about the prospects of this geospatial technology and the data that can be derived from it. And I'm excited to see a growing number of carriers take advantage of the value here. At the same time, it has never been more important for carriers to approach technologies like geospatial with eyes wide open, fully understanding the capabilities, what it can do, what it can't do, what it does well, and what it doesn't do well. Geospatial is absolutely a piece of the puzzle when it comes to accurate and profitable underwriting. In the same way that I believe self-inspection is a significant piece of that puzzle.
Why do you do these stupid puzzles?
It's a way to control the chaos.
So thanks for watching. As always, I'd love to hear your comments. Where am I right? What have I gotten wrong? Or perhaps I missed an important aspect of the conversation here. So please join the conversation in the comments below. If you're watching on LinkedIn, don't forget to hit the notification bell in my profile. And if you're on YouTube, you know what to do to that subscribe button. Take care, and I'll catch you in the next episode.